If you've been building a SaaS business for a few years, revenue is growing every single month, and your tax situation is somewhere between messy and completely unfiled, this is more common than you think, and it is fixable.
SaaS businesses have a specific financial profile that makes falling behind easier than it sounds.
Revenue comes in through Stripe, expenses go out through a bank account, and in the early years, the volume is low enough that it doesn't feel urgent.
Then year 3 hits, revenue is real, and suddenly there are multiple years of returns sitting unfiled with an IRS that has been receiving 1099K data from your payment processor the whole time.
Here's what the catch-up process actually looks like. We start with your earliest unfiled year and work forward using your actual transaction history.
Stripe exports, bank statements, whatever you have.
For most SaaS businesses in the early years, the volume is low enough that the historical cleanup is more manageable than it feels. As we rebuild each year, we find every deduction available.
Home office if you were building from home, the QBI deduction that gives qualifying businesses a 20% write-off, any contractor expenses that were paid and never properly documented.
We filed an extension on your current year to buy time while we catch up on prior years. And if you know you owe money, a voluntary estimated payment now slows down the interest that has been accumulating in the background.
The longer the backlog sits, the more interest compounds on what you owe.
But the catch-up itself is almost always less painful than the anticipation of it.
Once you're current, the planning conversations that were never possible before, structure, optimization, proactive strategy, all become available.
I'm Alan, CPA and CEO of Free Cashflow. We work with SaaS founders at every stage, including the ones who are behind and need someone who will actually help them get current without making them feel like a problem. Go to freecashflow.io and book a call.